Hey guys, welcome back to another episode of Growth Path. Today, I'm super excited to have Jochen Kust on. Jochen is the CFO at Earlybird Venture Capital, which is one of the largest, most successful firms in Europe. His background is all things chief financial officer. If I look at your LinkedIn profile, I see a minimum of 5 chief financial officer positions on there. So everything. So today we're going to be talking about all things around investment, how the current economic climate might affect that. Things that other background. Jochen's based in Berlin, and he is currently the CFO at Earlybird Venture. So, Jochen, tell us a little bit about what your focus is at the moment.
Yeah, happy to. Right now, the focus is, first of all, like most of my colleagues, doing the digitalization. So we try to streamline processes and become more effective and more data driven. Why are we doing that? Because we want to support the business more, to give them a good basis for their decisions, also keep track of our portfolio companies and all that. And this in a very effective way. We also want to report to our LPs, because as a venture capital company, we collect money from other people and invest their money in our ideas. So we want to let them know as soon as possible what's happening to their money. So this is something we focus on operational part to become streamlined and data driven. On the other hand, we want to be very communicative to our LPs and to our colleagues as well in the company to really connect finance to the company. Yeah. So pretty much outgoing persons, and as a back office team finance, you always need to keep track of what's going on, and you need to show what value you contribute. And I'm pretty confident that we already had increased our perception in the company to do so.
So are you're like CFO and digital transformation manager at the same time, is that correct?
Yes, I think you have to. There is this, I think on LinkedIn, it's mentioned on every corner, a CFO 4.0 or the new one, the new CFO role. Also that you have to be a good narrative. You need to tell stories to people and all that. So yes, that's pretty much me. I do not want to be a traditional CFO. So I'm living this CFO 4.0 or however you call it. Yeah.
Interesting. What are some of the challenges that you're facing with technology, if any?
First, there's too many, especially in a venture capital company. Like every day there's a new business case and you somehow get connected to that and you say, okay, well, we could do that. So somehow there's a big risk to get distracted from the ideas that really help you. Then there is, for many problems, there is a solution, but not one, there are 20. And then you really need to decide which way to go. And especially nowadays with all this artificial intelligence and agentic AI and all that, what's there? It's not coming. It's there. You need to think about what you do now for what you wait, and when you do something that you do not block you for the future. Because when you start now doing something that could be outdated in 3 months, so you waste your time and money for 3 months. On the other hand, when you don't do it now, when should you start? So there's always, you can't do it right in the moment, but you have to do what you do in the proper way. That's my opinion.
Yeah, that's interesting. That also goes to companies in the portfolio that you'd be looking to invest in as well, right?
It is.
So like, how do you make those decisions? Because this is something that's really difficult for me, because I've had companies come to me lately or come to the business lately and be like, we have this idea that we want to go to take to market. It's built on all things AI, right? And we are probably going to receive a round now in the next couple of weeks, which is going to be double-digit millions, right? As seed funding, right? And we want to go big with this. And I'm sort of looking at it being like, okay, do I invest my time into this because this could be made redundant between today and tomorrow, right? Like something new could happen on OpenAI, or Google update Gemini, or something happens which might just like that, but with their entire business model out of business in a heartbeat. How, as an investor, do you try, like, that's just me, as do I want to work with them and try to build something that's could be made redundant? As an investor that's looking to really fund the growth of this, how do you distinguish, between what's a worthwhile investment that could be that could offer longevity? How do you figure that out with an AI driven world?
So for us, we have two kinds of investment. There are the ones where we see, okay, there's a fast way to go to market, which actually increase also the speed. So the speed of change in the market increase, but also the speed go to market increase. So that there's a chance that you really be very fast in the market, and then you make your profit. Yeah, you can exit the company because it's going, and afterwards it's up to the team, to the company to stay up to date with the disruption, because this outdating you can outdate other people when you just have the next idea. You put just the next layer on top of it. So it's risk and chances, like always. There's a level for that. I think the team, and that's what we really focus on. We need a good team, not only good individuals. They have to work as a team together, and they should work on a big goal, on a vision, and they need to stay disruptive to their self business model. And this is the one thing what we do have. Yeah. So this fast go to market companies. On the other side, we have this very deep tech companies where we say, okay, this is a long time game changer, and this is most likely in AI very hard to identify in the moment. Yeah. It's more like you need a team that's really fast to really operate things, to get things done. This is the most crucial thing in the moment. You have to be fast. Yeah. So this needs to be the DNA.
So regardless of product type, it's people is the thing that you're really putting first, right? When you're looking at your investments, or how does people work together as a team?
Yeah, that's one crucial point. I mean,
interesting.
We have a lot of metrics. Of course, I cannot share everything, but the team is one point which is crucial to us.
Interesting. What are some of the key metrics that you're looking at? So when you say, okay, whether or not this is a viable investment, what are the top 3 metrics that you would say, okay, like these ones need to be in order for this to make sense alongside team?
I wouldn't say there's any order. So we have actually also a tool where we're searching the market on a mountain of metrics, and then in the end, the decision is still made by human beings. So always depends on the case, on the market, what they do. Of course, the market size is one thing that is important, but also speed to go to the market. There is property rights. It really depends on the case. Yeah.
Got it. Okay. So when we're talking about the market right now, so we're obviously seeing a lot of volatility in the past 2 weeks, just given the decisions that have been made from the States, let's say, and pulling back on things and pushing forward on things for 1 minute and pulling back the next. How do we think that, or how do you think that's going to impact, if at all, VC capital that's maybe floating around in the next months? Is it probably too soon to say, but my feeling was that coming into this year, and we spoke shortly just before this interview, and my feeling, having worked with a lot of VC backed companies, was that there was maybe a bit going through 23 and 24 where VCs were really tight in terms of not really willing to invest. I'm seeing the market open up a bit more when it comes to VC, not the VC money being a bit freer. I think the money is there. Whether or not the rule set behind it's another thing, but the money seems to be there. Will the sentiment change, do you think, or what are your thoughts on it?
So my first thought is I'm pretty sure that this volatility will stay, because it's not the first time he announced something, then he took it back. So it was kind of predictable. And I think a lot of guys make a lot of money by going short and then long again. The thing is, when you have that situation for an IPO, just imagine you have been on the roadshow, the price is locked, and you were there, and then you're 4 weeks. There's nothing to protect you, and then the guys going nuts or not, you can lose tons of money on that. So who's doing an IPO in those times? I wouldn't do so, because you cannot calculate anything. I mean, plus minus 3, 4, 5%, it's fine, but we had that in 1 day. So there was this German company, Rheinmetall, I think they went down 39% and then 27 up again in 1 day. Just imagine. Yeah. So this is something where I say this is really very dangerous for the exit case. And the exit case is a crucial part of VC. So which is right now one of the biggest problems of all of us, that there is no really active exit market. This is something, and this continues in the chain. When you cannot exit, you do not enter. Apart from that, this somehow is a catalyzer for the problem that there is money, and money is given to companies, but just a very few. So there's a very hard competition for the best teams, what I see. And it's very hard for the average companies to get money. Yeah. So it's really, it's focusing on very limited companies with a very tough fight to get those companies into the portfolio. And I think in those days, it's even getting harder for the ones that do not get money now, because with this insecurity, you want to be safe to have a good company with more than an option than an IPO. So M&As and all that needs to be taken into consideration, how to exit. I mean, fortunately, the time is limited. So normally a fund goes over 10 plus something years. And even though when he extends to a third period, that will be gone in those days. But you never know who will be successor. I mean, JD seems to be even harder than Donald. So this is, I think, just from the total atmosphere, it's infecting the market. From the business model, I mean, as long as you're digital, the tariffs are mostly not affecting our business models. Yeah. So this is not the key problem we do have. Actually, we do have some cases where we bet on the European sovereignty. So in this case, it's good. It's actually pushing. Yeah. There was this, you may have seen ISA Aerospace. They launched the first European rocket. This is one of our investments. And we're helping Europe to become more sovereign and that company in that regard. So it can also help us, but in general, it brings a lot of insecurity to everything. Everyone is a bit irritated by that. We talk about the US president posting on X or his own thing. He gave advices to buy stocks 4 hours before he just postpones his tariffs. That's just weird. And this is just what happened now. I mean, how long is he in charge now? Like 3 months.
Yeah.
We have some years to go. I'm not sure what will happen. Is he starting in Iran something tomorrow? There are a lot of more things than this tariffs. So this brings a lot of insecurity to the world. And this is affecting us, at least in total, independent from the concrete business space, which can be affected by tariffs. But this insecurity compared with the stock markets, difficult IPO situations. So it's not a good thing, I would say.
It's just creating uncertainty. The whole situation's creating uncertainty, and any uncertainty is not good when we're talking about large quantities of investment. Now, to go to your point from before, though, I think there's some silver lining to the cloud a little bit, in terms of what you mentioned before about only the best companies with the best teams are the ones that are maybe securing the investment, whereas mediocre companies are not managing to get their hands on investment anymore, which actually is, from where I'm standing, not such a bad thing. For a long time, like when we had the .com crash that happened back in the year 2000, I think it was, or early 2000s.
Yeah.
There was too much money floating around, and too much money given to everything that was online business. You could get so much investment, so much funding. And the problem was that none of these businesses were necessarily profitable. Like you were operating in a false economy. So there was plenty of money to float around, but nothing was really making money. And then all it takes is then like a bust to happen, like the .com bust, where everything just goes boom and it's all gone. And what happens is you've got like a long relay race of investors coming in and passing the baton over to the next guy, to the next guy, to the next guy. And then at the end, it just falls apart. So it's like almost like a false economy. And I think we're moving more towards we're moving away from the burn to let's make sure we have a profitable business model here. Let's make sure that the team are able to build a profitable business moving forward, rather than just burning cash at all costs, which I've also experienced at numerous tech companies over the years.
Yeah.
Do you see some positivity towards that? Is that what are your thoughts there?
No, I actually agree with what you say. I mean, just imagine we had different times when we had let's call it an exit bubble combined with this AI bubble. So I think we would have exactly the same situation, that everyone who could write AI waste the money. I just give you one example back to my daily work as a customer. So we're looking at the tool options to just summarize contracts in a structured way. I mean, you have this out of the box in Gemini now on Google, you have that in Adobe and all that. But still, I just wanted to see what the market offers. And there was just a company telling us, we have an AI solution. And then I said, okay, let's have a call. But I brought a tech guy to that call. Say, I don't have any question. I know you will show me some fancy dashboards, all that, but he has some questions to you. So turn out the only thing they did, they built somehow a BI tool, Tableau or Power BI on ChatGPT 4.5, I think, something I already have in my box by myself. So I say, guys, what's going on? They wanted to have 60,000 as a minimum to just have a look at my contracts and say, guys, it was nice to meet you, but the only thing that you offer me is a surface called Power BI or Tableau whatsoever. And the work is done by something I already got for very, very less money on my own desk. So, but it works. Yeah. So they sell this thing. I saw how much money they spend on commercials, and they will find some customers say, wow, that's AI, and they have a fancy dashboard, and they will make their money. So it is kind of a weird situation that everyone wants to have it, but no one has a clue about it. And that combined with the other macroeconomic situation, I think that would cause the next bubble again, which is
that's
so
interesting.
I see some positive things there, even though for us, I would not deny that a little bubble could help us just in the VC world, because I think there was just one digit exit in the last year. And some references, it's just very hard to keep that, because this also stops the development of the companies. Yeah, so innovation is stopped when you see what's happening in China, which is a different model. DeepSeek, or when you're autonomous driving, there's happening a lot, because they spend the money, because they have other exit models or another situation, just to keep track. It's needed. Yeah? So that's the bad part of the story.
Yeah, it's interesting. It's interesting to go back to your example there of that company that had a nice user interface and then was basically querying or prompting ChatGPT based on data that was in Power BI. There's a lot of that at the moment. There's a huge amount of that at the moment, and it's so easy to build stuff. Like we're playing around with building some product ourselves just over the weekend. Like I know some, like another founder that I work with that is a CEO of another business, but he had to solve this very specific problem. And that very specific problem was I'm not going to get into it in details, but it was around events and sharing your attendance at events on social, right? So he's organizing an event which he needed a solution for. So he built something using OpenAI. And then he was like, this is actually not a bad idea. So then he used a platform that then creates a UI based on AI, right? He spent a day, half day maybe, putting this tool together. He spent another less than half day using AI to create a website. And now he's got a tool, a fully functioning tool that works no problem, that is now being sold over a website that he's making money with now. And this is like, he put this entire thing together without a single developer, not a single coder. Didn't spend any time thinking about writing copy or anything for the website, and managed to get a sellable product online and launched in less than 24 hours.
Yeah.
Crazy.
This is crazy. So, and the outcome, sometimes it's good. Sometimes it's just, in my opinion, just not needed. But this is also, again, that's a good part of the story. You do not need that much money to create a product. So this is, that makes the world more competitive, and business-wise, it's always good. Competition is not always good, but in that case, it's just, you do not need, or the entrance, it's not that hard anymore. you can enter it just by being smart. You don't need to be smart and rich, or not smart and, which is again not that good for venture capital, because we want to spend money, but then maybe the money is focusing on really game changers, like building a rocket, or we have other things in the portfolio to do that. Yeah, so it's just I think, to sum it up, but it's good and bad, but I think it's, at least it's changing right now to the past, and it's
evolving, which is good. I think the evolution is good. I think I can't say what the future is going to hold, but especially if people are able to develop products so easily, and you're able to commoditize stuff very simply, and be able to get an initial version one, like not just a prototype, but a working prototype out the door very, very quickly, without any dev resource, without needing any seed or pre-seed capital. I think probably what you'll find is that you're going to end up with larger sums of money happening earlier on, or you have Series A happening much earlier, which would then be focusing on scaling, which would be then mostly around go-to-market, rather than a lot of money being spent on product in the early stages, because all of your product market fit, etc., can be very easily managed using or leaning on a large language model like OpenAI.
Yeah, I agree.
Yeah, it's very interesting. It's very interesting. What are so, just before we finish up, like, what are some of the challenges that you're facing at the moment in Earlybird?
Well, as I said, competing for the best deals, that's our challenge. That's actually the biggest challenge, I would say, in the moment. And apart from that, we're pretty established. So a lot of problems that you hear in the market, like there are a lot of things going on that other funds have problems to raise money, and all that. We don't encounter that in that sense. So we have a very good legacy. We have very good exit in the past. So this is fortunately not our biggest problem.
That's good.
It's more the deals, and the exit market is like it is. So we also obviously would love to have more exits, but it's very hard in the moment.
Sure.
To get the best deals and to keep them alive, or they keep themselves alive. This is always this is the venture case. So
absolutely. How many portfolio companies do you guys have right now?
In total?
Yeah,
it's roughly 80. I would say.
80. Very good. Super. Okay, well, look, Jochen, we're just up on time now. It's been really great having you, and a very nice conversation. I really appreciate your time. If people want to find you, where's the best place to get you?
On LinkedIn. Just go there. I'm every day there. Just connect with me, follow me.
Yeah. Perfect. I'll make sure that your LinkedIn details are shared in the description of this episode. And Jochen, I really appreciate your time. Thank you so much for coming on.
Thank you. It was a pleasure.
Thank you. Guys, this has been another episode of Growth Path. Tune in again next week for more great content. Thanks, Jochen.
Thanks. Bye.